portfolio strategy sorted, and we are joined by Jaiprakash Toshniwal, Fund Manager, Senior Equity Research Analyst, LIC Mutual Fund. Hi Jaiprakash, afternoon and welcome to the show. Since you're a fund manager, let us begin with talking about looking at value in the markets right now. What is your strategy on the value front? How, according to you, is the marketplace in terms of value-based sectors?
Thank you for having me on the show. So in terms of the value and in terms of the market, value in the market currently, we are seeing certain pockets of the sectors where the earning growth is much higher than the nominal GDP growth, so to say. And that's where we see the valuations are reasonable in terms of growth is there. And that some of these sectors, so to name as such, it's a pharma or let's say the chemical sectors. There we are very positive in terms of the valuation, and we are also seeing growth, and especially on this specialty chemicals side also, just to add. So these are the three sectors I should say that there is a value emerging, at least on the valuation perspective from medium to long term perspective. Yes.
All right. Hi, Ankur this side. I want to understand your perspective as far as the tariff concerns are concerned, which still remains. The 7th August is the new deadline. In that context, how should one place the bet in markets?
Hi, Ankur. So yes, on the tariff side, as you mentioned, the 7th August is a deadline, and what we have seen in terms of this 25% tariff is already now there, but the large part of the tariff, you say almost 40%, I should say, which is basically India export to US. Of the 2% GDP, 40% is to specialized electronics as well as pharmaceuticals, where there is no tariff has been announced yet. So to that extent, I believe the concern gets lowered down. Having said that, some of the exposures, which is very much focused on US exports, which is basically jewelry, gems and jewelry and textile, those are the most impacted. And at this point of time, when we see the numbers compared to the other South Asian countries, the tariff in India is very high. So to that extent, yes, there would be an impact on the market opportunity for Indian companies on these two sectors.
Absolutely. Jaiprakash, good afternoon. Mansi this side. Tell me, if someone is willing to park funds, build their portfolio, what should be the strategy at this point in time? Which sectors will be insulated from the news events which will come later? And at the same time, let's say, for example, your view on the specialty chemical space, or how are you eyeing the earnings season? Because the first half of earnings season was weak, but the second half is still giving us a few hopes.
Mansi, in terms of having which sector to allocate and which segment to allocate and which segment not to have, it's very hard at this point of time, because you would understand that since 23rd April or 23rd May, 2023 February and April onwards, we have the world order, which is a very different in terms of war and different terms of tariffs and all those things. So at this point of time, it is very well to say that diversified portfolio is a good approach for India, for investors in India at this point of time. And historically also, we have seen our earning growth are in line with the nominal GDP growth rate, and investors have made reasonable amount of wealth from investing in a diversified portfolio approach. Having said that, going ahead, we are seeing in terms of still on the earnings side, while if we talk about nominal GDP deflator is lower because of lower inflation, in nominal GDP somewhere around settling at 9% kind of level. And if you see right now also, Q1, whatever numbers we have seen on the headline indices, it's either somewhere between 6 to 8%, depending on which indices you take. So to sum it a point, earning growth is reasonable across sector. If you want to focus on some for a medium term, you can avoid, probably one should avoid auto and such, but there are certain value emerging, which I said earlier, in terms of pharma, in terms of specialty chemicals, in terms of capital market companies. So all these segments look good. Agrochemical sector so look good, because that sector is now coming out of cyclical bottom, I should say, of the last 2 years. So all these sectors looks interesting at this point of time. And as a portfolio manager at the investment house, we are all positive on these few sectors which I mentioned.
So Jaiprakash, please carry on. You were saying something.
In terms of specialty chemicals, again, it's a very specialized segment, so to say, and there are the companies we need to evaluate on a company specific as well as a chemical side specific. I just want to highlight one data point, that most of these specialty chemicals, the balance sheet size it's become so strong that in last 4 or 5 years now they can able to invest almost 1,000 crore kind of capex on a cumulative basis on a specific name, if I have to say. And these companies, this 1,000 crore is a very reasonable number, so to say, to expand the capacity and to cater to the market globally, not only the US market.
So the question for you now is, Jaiprakash, any concentration bet or contrarian bet that you think can be taken as so far we are just talking about long-term strategies, but then if someone really wants to make the most out of this volatility, any contrarian bet that you're focusing on or specific concentration in any theme or sector or type of companies?
I think the two sectors should stand out in this point of the if one have to take contra call and contrarian call, and we as a house are also taking it in some of the funds, which is predominantly the IT sector as well as the cap goods or a specialized cap goods segment. As far as IT sector is considered, the valuations are very reasonable. Obviously, yes, we are worried about the earning growth, so to say, but if you look about the numbers this quarter around, most of these companies are able to win the deal wins are recently good, and as the macro turnaround happens in US, mind you, in the RT sector, at least on the US side, the commentary is BFSI segment is doing good, as well as high tech and healthcare segment is doing good. The other manufacturing segment is not that great. So once that pick up and there is a macro tailwind story in US, we certainly see IT sector should do well. And of that IT, the sub-segment ER&D segment is also has a reasonable green shoot because of the EU and US deal. Because as you are aware, most of our IT R&D companies are exposed to European auto OEMs, and as the European relationship improves in terms of the tariff side, we do see auto OEMs started spending on the in the Europe market, and that's a positive for ER&D space. On the other sectors, the capital goods, specialized capital goods segments, be it abrasive segments or be it in terms of power-related equipment in India, which is because we believe India in terms of power sector is a very, very long-term story, and there are a lot of good niche players available in the power equipment industry, and that's where we are positive on.
All right, Mr. Toshniwal, thank you so much for sharing your views to our viewers. With this, let's move on to another important story coming from banking sector. Due diligence for IDBI Bank is complete, and Deepam expects